So I'd like to welcome everybody to the Food and Drink Regulation EU Exit webinar. The main purpose of this is to really share the information in terms of what the regulations are and what the impact is for the food and drink. And I stress the food and drink sector because this is tailored specifically to the needs of the food and drink. And in my conversations with companies, whether it's Weetabix, Carlsberg, Brioche Pasquier, you find that everybody has issues with these regulations and they have to navigate their way through. So very much it's to help people navigate their way through. As I stress, we're SEMLEP. We're doing this in partnership with the other ARC LEPs. So you can see at the top there, it's with OXLEP, New Anglia LEP, Cambridge and Peterborough, and Bucks, etc. So it's everyone within the ARC and further even. In terms of SEMLEP, our focus is as a local enterprise partnership for Beds, North Hants and Milton Keynes, and we support business, people and place. And by that I mean we support business through the Growth Hub in terms of advice, grants, making awareness of different ways that people can get information for their business, and then supporting people. That's around skills, and that might be around reskilling if there's impacts of redundancy, but it can also be in terms of careers and curriculums for schools, and then place in terms of investment. My role is as a BDM, and I'm responsible for the food and drink sector, the logistics sector, energy, and our inward investment team. So a broad cross-section in terms of my responsibilities. I'm really hoping today that whether you're coming to it fresh or whether you're coming to it that you've done some studying about EU exit, or that you've got particular issues, that you'll be able to get something out of the webinar today. It's being done in conjunction with Andrea Collins. Some of you may be aware of Andrea. She's done some of the other broader and more detailed ARC webinars that we've done, but this one is specific to the food and drink. So the last thing I need to do is just give you a bit of housekeeping. We're going to be, in terms of a presentation, about 45 minutes, and then an opportunity of 10 minutes for questions. If you can put your questions into the chat bar, that works so much better than trying to break the flow of the presentation during it, and I'll try and coordinate those afterwards. Okay, health warning, this is advice, it's recommendations, but everybody has to take responsibility and the decisions which are appropriate for their own business. So I do just stress that at the start. In terms of this now, I will hand over to Andrea, who's going to, from the export department, who's going to run the webinar for the next 45 minutes. And then I'll come back and handle the questions. So over to Andrea. Thanks now.
Super, thank you, Richard. Sam, could you stop the screen sharing, please?
It should be off now, Andrea, already.
Should it? Okay, let me have a look. Okay. Wonderful. Hopefully everybody can see that.
Yeah.
Super. Okay, hello everyone. As Richard said, my name is Andrea Collins. My company is the Export Department. Yes, some of you might have joined some of the webinars that we've been doing, but as Richard said, this is very much around the food and drink sector today. So I don't class myself as a food and drink expert. I'm an international trade person, but any questions that I'm not able to answer today, I will take away and get the information for you. Okay. So what we're going to look at, Richard provided a spec for me, things to consider. So we're going to look at the implications of Brexit more widely in terms of trade with the EU. We're going to cover a little bit about the Trade and Cooperation Agreement. You'll hear me referring to it as the TCA, and the specific impact that that has on the food and drink sector. I just pulled together some stats on the food and drink sector as well, in terms of, you know, understanding what its exports contribute to the overall UK exports, and and a whole load of other stuff. So I've got a slide on that. And then we're going to talk about specific impact of Brexit on the sector. So we'll be covering product labelling, sanitary standards, tariffs and origin is a big one, obviously. Some of the non-tariff barriers that are still present despite the TCA. I think what we have to realise is that no free trade agreement can replicate the freedoms that we had as part of the single market or the customs union, and it's understanding what those non-tariff barriers are that remain, and how we circumnavigate those or try and overcome the difficulties that they pose. We'll talk a little bit about the Northern Ireland Protocol, because obviously there's a significant impact on the flow of GB NI goods, not NI to GB goods, but certainly going the other way. We'll talk about the practicalities of import and export under the new customs procedures and border controls. And then we'll talk a little bit about regulation and divergence. So the kind of regulatory standards that the two parties have signed up to as part of the TCA, and where the risk is really in terms of future divergence. And then we'll talk a little bit about future developments in the UK and EU trading relationship. So there are some items that just didn't make the cut for the TCA being announced on Christmas Eve, and so they remain the focus of further negotiation and discussions for the next 4 to 6 months. And then, as with all of my presentations, I've included some links to sources of information and advice. Okay, so in terms of extra formalities and considerations, so the implications that Brexit pose upon us as traders, really, and I've just listed some of them here. So, you know, as traders, we're now having to get to grips with the documentary requirements that apply to our products when they're either exported to or imported from EU countries. We have to understand the process at the UK and EU borders and what kind of checks and inspections are applicable to our goods. And the border operating model, if you haven't consulted it, is a fantastic source of information and split by certain commodities. So that's great. The process flows will you'll see on a couple of my slides later on. Obviously, origin becomes a big one with the Trade and Cooperation Agreement. When we've been dealing with free circulation of goods, we might not have had to worry about origin so much, but we need to understand the origin of our products, because that plays a big part in qualifying for that tariff-free access to the EU and for the EU markets to the UK. We need to have those frank and open discussions with our clients and suppliers who might be particularly cost sensitive, because there are extra costs and a hassle, you could say, in terms of dealing with the UK now that they haven't experienced when we were all part of the trading bloc. So, you know, we're seeing customs clearance costs, we're seeing higher freight costs. Obviously, there's always currency fluctuations because we've never been part of the euro. We need to understand as traders whether our goods are subject to any export or import licensing controls, which in many respects we've not had to worry about that in the past, except in the case of military goods. We need to be familiar with the regulation governing our goods in the EU markets, but also in the UK. So now we're dealing with two sets of regulatory bodies and complying with two sets of regulation now that we've technically left the EU. We need to consider, you know, our clients where we're working in time-sensitive sectors, because they can be impacted by customs delays, of which we're seeing quite a lot at the moment, and obviously foods in particular, where they're perishable goods. There are considerations in terms of getting goods into the EU and getting goods out of the EU into the UK. We've got considerations around duties and import VAT that become applicable to our goods going into the EU and EU goods coming into the UK, which obviously has an impact on affordability and cash flow. The government has made some movements in terms of alleviating this. We can use postponed VAT accounting to account for our import VAT, and obviously with the TCA, if our goods qualify or meet the certain rules of origin, then we qualify for that tariff-free access as well. But cash flow considerations are definitely something that we need to be looking at as a result of leaving the EU. So in terms of the cooperation agreement, so the TCA, there are certainly some uncertainties for the food sector. Businesses are looking at their products and grappling with what paperwork needs to be completed, what assessments are needed, codes, and what tariffs apply. If you think about it, both parties, when they announced the agreement on the 24th of December, were very pleased to say that they'd agreed zero tariff and zero quota trade on goods. But that access to that tariff-free or that tariff-free access means that companies need to meet those rules of origin requirements that are laid out in that TCA. So they need to make sure that their goods meet the local qualification criteria. This is obviously significantly more burdensome than the free circulation of goods that we've been used to for however many decades. So talking about rules of origin, businesses are having to identify the full origin of their goods, as well as providing additional paperwork in order to qualify. So to be considered originating and to qualify for preferential tariffs, those products have to be sufficiently worked or processed within the parties to that agreement, so the UK, the EU. You'll hear reference to non-originating materials, so they're those materials that are imported from third countries. And actually non-originating can also refer to materials where we don't know what the origin is. Now, the use of non-originating materials is permitted within the TCA, but you have to consult the specific rules to understand what those thresholds are. So when we're talking about rules of origin, there are two ways that a product can be considered originating. So it can be wholly obtained, and that's those products that have, or those goods that have been exclusively obtained or produced in the territory of one of the countries that make up party of that agreement, and they haven't used any materials from any other country. Now, the other way is to define them as substantially transformed or sufficiently transformed, and that's in line with the relevant product-specific rule, or the PSR, in the TCA. Now, there are typically three basic rules used to decide if your goods are sufficiently transformed. And Sam would have access to a webinar that we've done previously where we went into a lot more detail on this, but there are three rules. So there's the ad valorem, or the value added rule, the change of tariff classification rule, and the manufacture from certain products or through specific processes. So there's those three rules. The TCA includes a combination of those rules. It also includes a list of processes that, if carried out on non-originating materials, they're not considered to confer originating status. That means that it's just minor processing. Not enough has been done to the goods to confer origin, if you like. So a product wouldn't obtain originating status if you just grated cheese or deshelled nuts, for example. But strangely enough, the example of crushing or grinding pepper is listed in the UK government advice as processing that goes beyond that insufficient operations rule. So there's likely to be some uncertainty for some time to come within the food and drink industry around how these rules are going to be applied and interpreted to some products. Now, as of the 1st of January, in order for businesses to benefit from the preferential tariffs when importing into the UK or the EU, they need to claim preference on their customs declaration and then demonstrate that they hold that proof that the goods meet the rules of origin. So on the import declaration, box 36 is the preference box, where there's a certain code that goes in that says that these goods have been imported under preference, and then there has to be documentary evidence that tallies with that. So it will depend on the specific free trade agreement as to which kind of documentary evidence is needed, and we'll come on to that in a little bit. Now, goods that don't meet the rules of origin, they can still be traded, but they won't be able to benefit from that preference, that zero rate or reduced rate of duty under the TCA. So importers would have to pay the standard, or what we call the most favoured nation tariff on those imports. Obviously, for imports into the EU, that'll be according to their common external tariff, of which we've just left. Imports to the UK, that'll be according to our UK global tariff. And it's important to take a look at the UK global tariff, because the government has liberalised some almost 6,000 commodities, which means that between 5,000 and 6,000 commodities on import now attract no duty at all. For some goods, most favoured nation tariffs might be low or zero, and for other goods they could be much higher. So it's really a commercial decision over whether it's in your best interest to meet the rules of origin to benefit from those zero tariffs, or whether or not there's actually a zero tariff to those commodities anyway, in which case you don't need to meet the rules of origin. So there's a commercial decision to be made there. In terms of customs trade, so the TCA obviously has third countries. It requires that we make those customs declaration and lodge that paperwork to process the movement of goods, and that's something we've not had to do as part of the EU. It does provide mutual recognition for trusted trader schemes, so you'll hear those of us in international trade talk about authorised economic operator status, which is a mechanism. It's a little bit like well, it is a trusted trader scheme that allows importers and exporters that have that accreditation to streamline their customs procedures when they've registered for that. But unfortunately, sanitary and phytosanitary border checks are required under the TCA for the trade of live animals and products of animal origin, meaning obviously that agri-food traders are met with that extra cost and burden. As you'll know, if you have traded with countries outside of the EU in the past, those SPS border controls are quite extensive. So they involve extensive checks, specialised paperwork, and frequent physical inspections. Now, the TCA does set out an objective to keep the frequency of checks to a minimum. It's said that they'll be regularly reviewed by a new body. So there's been a new body launched called the Trade Specialised Committee on Sanitary and Phytosanitary Measures. It's a mouthful. But the remit of that body is to see if any further facilitations are available without compromising biosecurity. Those of you that are familiar with the UK border operating model will see that the UK is phasing in checks for EU goods entering GB. But checks are obviously required on goods moving from GB into Northern Ireland, because Northern Ireland remains closely aligned with the EU regulatory-wise. But the EU has agreed to mitigations and grace periods under the Northern Ireland Protocol, which is great news. Conformity assessments, there's limited mutual recognition of conformity assessments. So most goods are having to go through two sets of conformity assessments if they're to be placed on both the UK and the EU market. So some regulated sectors, including organics and wine, have been granted streamlined conformity assessments. So with wine, the TCA contains specific facilitations to the trade in wine. So producers are allowed to self-certify conformity and the quality of their wine. And then there's common principles on labelling. And both the UK and the EU are committing to mutually recognised wines produced according to each other's rules, as long as they remain in line with the recommendations by the International Organisation of the Vine and Wine. Now, with regard to organics, this was welcomed. The TCA outlines equivalence in current EU and UK organic rules for all categories of organic produce. So organic products complying with EU law and certified by controlled bodies recognised by the EU are accepted in the UK market and vice versa. That equivalence decision will be reviewed by both parties at the end of 2023. But so that's kind of like talking about the TCA. In terms of how Brexit indirectly impacts the sector, there's no doubt that it has some impacts that we'll be feeling the ripple effects for some time to come. So, you know, we estimate that there's some 130,000 of the 400,000 strong food and drink manufacturing workforce that are actually non-UK nationals, many from Eastern Europe. So we could see in the longer term, as we lose some of those employees, that we see an increase in wage costs. Obviously now the UK has its new UK points-based immigration system, whereby companies have to become sponsors in order to hire non-UK nationals. So there's some changes there. The impact on the UK's agricultural sector through a potential loss of farming subsidies is likely. Manufacturers could become impacted by the availability of ingredients, which obviously in turn could give way to cheaper imports from other countries. And if you think about it, food and drink producers are already facing tough trading conditions, many of them seeing ingredient price increases largely as a result of a weak pound, COVID and the increased cost of trading with the EU, for example. Non-tariff barriers we'll talk about in a little while. We'll talk also about divergence in a little while as well. So both parties have set out in the TCA their commitment to stay regulatory aligned in a number of areas. And there are certainly mechanisms in place to address deviations, but longer term divergence has to be a consideration and concern for businesses. So just pulled together, and I don't want to really labour the point because you'll get a copy of the slides, but I just pulled together some stats on the food and drink sector. So I was particularly interested in the export stats because the UK government and the CBI and anybody that you listen to at the moment very much sees export as the UK's means of growing its way out of the COVID pandemic. And the DIT and government as a whole is going to be investing a lot of money over the coming years to help UK companies to increase their exports. And so I wanted to understand really the number of the kind of main exports in the food and drink market. And I also wanted to understand the number of countries that we export to. And I was quite amazed that it's 220 countries worldwide. In terms of moving forward, there are some emerging markets with growing middle classes that have a real appetite for British goods. And they should really be considered with by exporters that are looking to expand overseas. If you think about it, probably one of the few positives to come out of Brexit is the fact that we upskill in terms of exporting. We have to, because we're not just trading with our local neighbours anymore, we're actually exporting to them. So we should increase our skills and our ability to trade internationally. And so those emerging markets probably don't quite look so daunting moving forward, and they pose fantastic opportunities for exporters. So the impact in terms of product labelling, so you'll all be familiar with this in terms of your requirements, your regulatory requirements around labelling. So, you know, we're having to provide the name of the food, the best before and use by date, any necessary warnings, net quantity and so on. So we're very familiar with some of this, and it's really understanding how this changes in line with Brexit. So moving on to the next slide. So one of the first considerations, and some of you may already be familiar with this, is the food business operator. So pre-packed food sold in the remaining 27 member states now have to include the name of the EU and NI or stroke NI address on the label of either the responsible food business operator or the importer established in that EU 27 nations or NI. So that GB address alone will no longer be sufficient because we're no longer part of the EU. So you've got this notion of if you're supplying goods in the UK and then also in the EU and Northern Ireland, then you need to have two addresses. Now, product placed on the GB market has to have a GB address, but the difference here is, as with many regulatory requirements, the EU's requirements are instantaneous. We've had to grapple with those from the 1st of January, but the UK's phasing changes in. So you can continue to use an EU, GB or NI Northern Ireland address for products sold in GB until the 30th of September 2022. But then from the 1st of October, the very day after, that pre-packaged food or casein sold in GB has to include that UK address for the FBO. Obviously, as I mentioned before, with Northern Ireland, food sold in Northern Ireland has to include an NI or an EU FBO address from the 1st of January. It's like the EU, it's instantaneous. For GB, as I said before, a label that carries both addresses, so the address of the FBO responsible in GB and the one in the EU stroke Northern Ireland is permitted, and obviously that will really help address requirements for both markets and allow that product to be marketed in both the EU stroke NI and GB. Really important to understand what's considered a suitable FBO address as well. So the EU won't accept a PO address because they don't believe that this conveys an established business. So it has to be a kind of an address of a company that's undertaking production or distribution or the processing of that food. Okay. In terms of equivalency, so I talked a little bit about on organic food before. So this was really welcomed when you think about the exports of UK organic food to the EU as some 255 million a year. So equivalency was welcomed in the TCA. So the EU is effectively saying that it will recognise the 6 organic certification schemes operating in the UK until the 31st of December 23. Now, recognition by the EU of the UK's organic sector is really important because it continues access to that vital Northern Ireland market as well. And so it brings a certain level of certainty to producers. Obviously, unfortunately, outside of the TCA, Brexit affects the export of organic products beyond the EU because the UK has automatically dropped out of some of those equivalency agreements that were previously negotiated by the EU when we were part of the bloc. So obviously there's been a number of continuity agreements negotiated that have replicated what we had as part of the EU, but really it's probably best to contact your organic certification body for the latest status and advice on that one. Geographical indications or GIs, so as you know, they refer to food, drink and agricultural products with geographical connections or that are made using traditional methods, and these can be registered and protected as intellectual property. So not a trademark, because obviously a trademark belongs to the business that's registered a product, brand for protection, but a GI protection guarantees a product's characteristics or reputation, if you like, its authenticity and origin, and it protects the product's name from misuse or imitation. So GIs in the UK that have been registered and protected under the EU GI schemes now fall under the UK GI schemes. So the UK has now established its own GI schemes because the EU rules cease to apply on the 1st of January. So the UK GI schemes protect registered product names when they're sold in Great Britain, so England, Scotland and Wales. All existing UK products registered under EU GI schemes that were registered before the end of the transition period, so before the end of last year, are now protected in the UK under the UK GI schemes. So if you're a producer, this is quite important in terms of labelling, if you're a producer or retailer of an agri-food GI produced in England, Scotland or Wales and registered before the end of the transition period, you'll now have until the 1st of January 24 to adopt the relevant UK logo on any product packaging or marketing materials. The UK has a UK register to take a look and check to see if that GI is listed as well. Obviously, referring to Northern Ireland again, the EU GI schemes continue to protect registered products when they're sold in the EU and Northern Ireland. Those of you familiar, you'll know that there's 4 UK GI schemes. I think at the back of the pack I've provided the list to those. If you're looking to have the GI protected under the EU scheme, you have to have the UK, you have to be registered on the UK GI scheme first. And similarly, talking about third countries again, the UK government is currently working to transition EU free trade agreements, like I said, those continuity agreements, which will ensure at a minimum continuity of protection for the GIs included in those deals. So that's quite good. So I'd watch this space there. So country of origin, with regard to labelling. So foods, so in terms of the EU market, food from Northern Ireland can continue to use origin EU. And food from GB can't be labelled as origin EU anymore from the 1st of January. Food from and sold into Northern Ireland can continue to use origin EU because of that close regulatory alignment from the beginning of this year. Food from and sold in GB can be labelled as origin EU until the 30th of September. So we see that kind of transition, that phasing in again to try and help UK suppliers with labelling requirements and so on. However, the very following day, so from the 1st of October, food from GB must not be labelled as EU origin or origin EU. Health and identification marks. So Products of animal origin moved into the EU and Northern Ireland markets from Great Britain now require relabelling to meet the requirements. Okay, so that was effective from the 1st of January. GB and non-EU markets, so product of animal origin that's been placed on the market in GB after the 1st of January, can reach the end user in non-EU markets without the need for relabelling. So again, in an attempt to kind of phase in those changes and alleviate pressure on companies, legislation in England, Wales and Scotland has provided for that 21-month period of adjustment for goods placed on the market in GB to try and, I suppose, reduce the impact of change so that companies can deplete existing stocks of labels, wrapping, packaging and so on that carry that UK EC identification mark. The provision starts from the 1st of January and is available for food businesses up until the 30th of September. So you've got that kind of transition period. And after that date, the use of labels that carry the UK EC identification mark would be unlawful. So you've got that time period. In terms of moving products of animal origin from GB to NI, there is a 3-month grace period for authorised traders moving products of animal origin, composite products, food and feed of non-animal origin and plant products. And then there's also a 6-month arrangement that's been put in place to enable the continued movement of certain meat products from GB to NI. All of those conditions are listed on the gov.uk website, and I've given a link at the back of the pack. The UK government has been quite clear in saying that, you know, relevant enforcement authorities have to adopt a proportionate and risk-based enforcement approach because they recognise that this is a difficult time for businesses and they're going to take time to adapt to the new requirements, if you like. So I've given some examples here of what the new health and identification marks look like. So for products of animal origin produced in GB, the EC suffix is removed and the marks carry the full country name United Kingdom or the abbreviated code GB or UK. It's really confusing that we have 2 origin codes for our products. For products of animal origin produced in Northern Ireland, the mark could continue to display the EC suffix and it carries the full country name United Kingdom in brackets Northern Ireland or an abbreviated code UKNI. There's an exemption for eggs for human consumption and hatching eggs. So eggs in shell for human consumption and hatching eggs produced in the UK don't need to carry the UK identification or health mark and can continue to be marked in the same way as they are now. So that's an exemption for eggs. In terms of additional considerations, so we can't use the EU emblem any longer. So as of the 1st of January, we can't use the EU emblem. We have to instead use the British emblem to signify the country of origin on the food label when exporting to the EU. As with everything I've talked about today, British produced goods that are sold in GB can still use the EU emblem because we've got that transition period. With regard to the organic logo, so thankfully, as I said, the EU's recognised UK control bodies, so companies can continue to use the EU organic logo on GB organic food or feed until the end of 2023. It's not compulsory, but if it is used, obviously those products need to meet the EU organic labelling requirements and statement of agricultural origin. If you use the EU organic logo for exports to the EU, so you're placing product on the GB market and also the EU, you'll need to include both the GB statement of agriculture and the EU statement of agriculture as well. And importantly, you can still continue to use your UK organic control body logo because obviously those control bodies are recognised by the EU. Okay, moving on swiftly. Increased sanitary regimes or sanitary standards. So the UK and the EU have now separated, so they maintain separate regimes regulating that human, plant and animal health. Now the TCA places a duty on both sides to ensure that any sanitary or phytosanitary border controls are proportionate to the risks identified. And as I mentioned earlier, these are going to be regularly reviewed by the new body that's been set up to see if they can identify further facilitations without compromising that important biosecurity. The agreement recognises zoning, which allows imports from pest and disease-free parts of the UK or the EU to continue. So if there was a geographically concentrated outbreak, that trade of goods could still continue from those disease-free parts of the country. It also commits to ongoing EU-UK cooperation on animal welfare, antimicrobial resistance and sustainable food systems. The EU separately granted the UK national listed status, so allowing the trade of live animals and products of animal origin and plants. But as we know, there are those stringent compliance requirements with respect to UK and EU laws in that area. As I said earlier, those sanitary and phytosanitary checks are the most extensive. And whilst the TCA sets out a general aim to keep the frequency of those checks to a minimum, it certainly doesn't remove them. And really, in essence, the UK government failed. It had this ambition of agreeing an equivalence mechanism for SPS measures, or at least agreeing something like a reduced level of checks or fees, along the lines of perhaps what the EU and New Zealand have. They've got a kind of vet agreement where only 1% of goods are subject to SPS checks. But I think it would have just required more regulatory alignment with the EU in order to get that equivalence. And obviously that's something that the UK government just didn't find very palatable. But I think as the reality of SPS and the costs and the holdups and so on becomes clear, we might see the UK government move further towards the EU in the future. Obviously, that lack of equivalence means that those agri-food traders incur those extra costs for GB EU trade, and whereas we've got that phasing in the UK, we don't have the same in the EU. Sorry. But there is some promise with the TCA, including those bespoke arrangements for both sides to hold regular and joint reviews around SPS border control. So we remain hopeful, if you like. Rules of origin, as I said, is a big one. And companies that have exclusively traded within the EU and therefore only really been exposed to free circulation of goods will have very little working knowledge of rules of origin. So I thought it might be quite good to give a quick overview of some of the terminology. So if we talk about originating status, so products have originating status if they've either been wholly obtained or sufficiently worked or processed. So that originating status and preferential origin applies to all preferential origin arrangements. So wholly obtained applies mainly to natural products from the beneficiary country and to goods made entirely from them. So I always say to clients, it's kind of animals that have been born and raised in a country, or crops that have been sown and harvested in a country automatically are granted wholly obtained status. But those products that are sufficiently worked or processed, they are non-originating materials or components, if you like, that have to be sufficiently worked or processed in order to obtain origin in that country where they're being worked or processed. And that sufficiently processed is really important because of those minimum lists that I'm going to go on to talk about in a second. Cumulation is the term used to describe a system that allows originating products from one country to be further processed or added to products originating in the other country. If you like, both parties that are part of the FTA or the TCA can combine their raw materials and processing power to count as if it originated in their own country, if you like. Bilateral cumulation is in operation in the TCA. And it's the basic type of cumulation. It's common to most origin agreements, but fantastic that it's there, even though it's difficult to navigate. Product-specific rules, even if the materials from third countries are those non-originating materials I talked about, even if they're used in the production, goods can be considered as originating when they satisfy the requirements set out in the product-specific rules. So there'll be thresholds that need to be met. Minimal operations, I referred to those earlier. So they're those operations that when carried out, either individually or in combination, are regarded as just being of such minor importance that they never confer originating status. Okay, so all preferential origin rules contain an article which defines the working or processing which is to be regarded as insufficient to confer origin. And the TCA is no different, there's a long list. The general tolerance rule. So that permits manufacturers to use non-originating materials up to a specific percentage value of the ex works price. Now, it's important to note that when specific working or processing rule already allows the use of non-originating materials, so it might be in the product specific rule, the tolerance rule can't then be used to exceed that percentage amount specified in the list rule. Okay, so the maximum tolerance is always dictated by the specific rule. Okay. Now, the percentage of tolerance allowed varies from one preferential regime to another, so you really need to understand the rules applicable to your commodities within the TCA. No drawback. This is interesting because unlike many EU FTAs, the UK EU TCA doesn't include a no drawback clause. So a drawback clause normally means that no tariff preferences can be claimed by the importer if the exporter has benefited from not having to pay import duties on imported input materials. So under something like an inward processing procedure, for example. In the EU-UK bilateral trade, though, no such prohibition applies. So that basically means that for a UK producer to use inward processing for production in the UK, the EU customer can still claim tariff preferences upon import into the EU, assuming that the origin rules are satisfied and so on. Now that stands as it is until the end of 2023, and then both parties can request a review of that provision. But that is very definitely a break from the usual EU FTAs that are in place. Direct transport rule, preferential agreements always contain rules concerning the transportation of preferential goods from one party's territory to another. And the purpose of the direct transport rule is to ensure that goods arriving in one country of import are the same as when they left the country of export. So they haven't been tampered with or their origin altered in any way. And sometimes where goods have to pass through or stop over in a third country's territory, they have to stay under a customs supervision to kind of prove that they haven't been tampered with or the origin being changed. And you might have to apply to have a non-manipulation certificate issued by the authorities of that country where the goods have stopped over. And then finally, proof of origin. So where goods are claimed to have a particular preferential origin, the customs authority of the importing country has to be satisfied that the claim is legitimate, so they can apply that preferential tariff. And that's when you require that proof of origin. So different preferential agreements require different proofs, and you always have to be sure which one applies. So some EU agreements require a certificate EUR1, which you might be familiar from when we were part of the EU, or a Euromed, or some GSP nations provide origin declarations using the REC system. You always have to check which particular proof of origin is required by your customers, say when you're exporting to them, in order to help them claim for that preferential origin. So you might be able, in the past to have used approved exporter or movement certificates or origin declarations. In the CTA, we have the notion of statement of origin. So that's a declaration that we can make on commercial documents, so the commercial invoice, delivery note, etc. Not the bill of lading, really important to mention, not the bill of lading. And then we've also got the notion of importer's knowledge as well. So they're the two mechanisms by which we can declare origin and help our customers benefit from those preferential rates under the trade agreement. I am rushing through here, Richard. Impact of tariffs and origin. So yes, in essence, the CTA has achieved that no tariff and quota objective, but and they will tell us that it's unlike any other agreement that's been signed with any other country. But that whole origin piece is really quite complicated for UK manufacturers to get their head around. It requires that everybody in the supply chain understands fully their bill of materials and the origin of the products, and that origin should pass through the supply chain, because the origin of a goods isn't necessarily where it's been sourced. Okay, so goods can be imported and then sold on, and just because you source them from a UK supplier doesn't mean to say they're of UK origin. And then obviously, as I mentioned earlier, in the TCA, we've got that much welcomed bilateral accumulation, which does help enormously. I've given here just quickly some examples of what is classed as wholly obtained examples, and some that are sufficiently transformed. Actually, some of these were taken from a DEFRA presentation that I watched some time ago. There will be some foods that simply won't be able to meet the rules of origin, and these have started to be identified. So, you know, sugar imported from the Caribbean and refined in the UK will not qualify for access to the EU tariff-free system. Basmati rice imported from India and milled in the UK won't qualify, and also any meat product has to contain only meat from animals born and raised in the UK or the EU. So going back to what I said in the previous slide, everyone, all businesses have to scrutinise their supply chains to understand how the rules of origin impact their business. So they need to understand whether they can meet those percentage thresholds. So I know it's stepping outside of the food and drink sector, but cars, for example, in the automotive sector, can contain no more than 45% of materials coming from outside of the UK or the EU. And then from 2026, electric cars won't qualify for tariff-free trade if their batteries were imported from outside of the UK or the EU. So there are specific rules that apply to specific commodities that you have to be aware of. Just talking very briefly, I've just listed a few of them here, but I think it's important, as I said at the very beginning, to recognise that the CTA and indeed any free trade agreement, however fantastic, can never replicate the freedoms and the trade that we had when we were part of the single market and the customs union, and indeed the EU VAT directive, because life was a lot simpler before we left the EU VAT directive as well. So there are essentially non-tariff barriers now to trade with the EU. When I refer to technical barriers, I'm talking about those regulations on the contents of products and the process by which they're manufactured. So also labelling, which we discussed at length earlier on. Obviously, as I said earlier, there are some ways in which the CTA has gone a little way to alleviating some of the barriers. So I mentioned organic products and wine products where there is kind of equivalence, which is great. But there's no doubt that there remain some significant barriers to EU-UK trade. So we've mentioned sanitary and phytosanitary measures. Obviously, pre-shipment inspection, all kinds of formalities, so documentary, identity and physical inspections on goods going both ways. Quality conditions, so conformity assessments and so on. Also the impacts on post-sale services. So it's been very easy to establish entities in the EU where we wanted to provide that local post-sale services. That becomes more difficult now that we're outside of the single market, and we lose a lot of the freedoms and the protections that we had when we were all classed as kind of local businesses to each other. Obviously, we've got the rules of origin, which are a kind of barrier in themselves if you can't meet them. GDPR remains a big one, and I'll come on to that in a second. And then changes to VAT, companies are still grappling with what that means, as we change the notion of VAT on goods from being a consumption tax to an import tax. And then obviously the Northern Ireland Protocol is a whole world of as a pain for all sectors, to be honest, not just the food and drink sectors. Just touching on the Northern Ireland Protocol for a second. So you'll remember it well from the withdrawal agreement negotiations back in 2019. The protocol really serves to create that legal border down the Irish Sea. And obviously we know the overriding principle was to avoid a hard border on the island of Ireland. And the government said it wanted that unfettered access for GB for Northern Ireland companies, to the GB market. But depending on where the goods are moving to and from, they're going to be treated slightly differently. So for trade coming from Northern Ireland to GB, there's no additional processes, paperwork or anything like that. But for trade going to Northern Ireland for GB, they can face tariffs if the goods ultimately are entering the EU rather than staying within the UK customs territory. So they're what we call those at-risk goods. You'll have heard us talk about those at-risk goods. Obviously, there won't be tariffs levied on goods remaining within the UK customs territory, but there's a process that needs to go through to almost declare that those goods aren't at risk of going into the EU. Obviously, there's additional processes on goods arriving in Northern Ireland, specifically for those animal and plant health or agri-food goods that are warranting specific checks and controls, and they're all being implemented at border control posts in the Northern Ireland ports. And then VAT, as I mentioned earlier, is a bit of a nightmare with the Northern Ireland Protocol, because Northern Ireland remains aligned with the EU VAT directive, but remains part of the UK VAT and excise system. So get your head around that. It's a bit of a mess. So how it should work is that Northern Ireland goods entering GB don't face any customs checks or controls, but goods leaving GB for Northern Ireland are subject to declarations, checks, approvals, all sorts. Those at risk goods, they're not classified as being at risk if the EU tariff is 0%. So obviously the tariff for goods going between GB and Northern Ireland is 0%. So if the tariff, the EU tariff, that corresponds to that commodity is also 0, then those products are automatically not at risk. But where there is an EU tariff applies, then you need to basically declare that those goods aren't at risk, and you do that via access to the UK Trader Scheme, which I've given a link to at the end as well. So those at-risk goods take a little bit of getting your head around. Also, VAT implications are a big consideration, because different VAT rules apply depending on the place the goods were at the time of sale. Anybody who is trading with Northern Ireland, I would recommend, if you haven't already, to sign up to the Trader Support Service, because they will be enormously helpful in managing the paperwork to get the goods into Northern Ireland. And the Movement Assistance Scheme as well is where you require any kind of certification of your goods in order to move them into Northern Ireland, and that is paid for. So if you need an export health certificate or a phytosanitary certificate, you can have those basically free of charge as part of the Movement Assistance Scheme when those goods are staying within Northern Ireland, because nobody should have to pay to have their goods certified to stay within the UK Customs Authority, if that makes sense. I am rushing through. I've just given you the one thing I wanted to mention about EORI numbers. We've got them coming out of our heads at the moment. GB EORI numbers, EU EORI numbers. If you're trading with the EU, with Northern Ireland, sorry, you may well need an XI EORI number to move goods in between Northern Ireland and GB, and actually to move goods between Northern Ireland and non-EU countries as well. So an XI EORI number is something that needs to be considered. Just to give you a quick export sample, so this is taken from the new border operating model. It just shows, I suppose, the complexity involved in moving goods now between the UK and the EU in the case of an export example. So, you know, the UK export has to source an official vet or EHO who can certify the goods. So somebody like AmiVet, who issues health certificates for meat, dairy, food, and so on. Then the EU importer needs to check that it can actually import the goods from the company. So are they approved? Obviously, that goods documentation has to be routed through a border control post. If goods are non-harmonized, then there might be other requirements placed upon them. We're into the realms of export entries and import entries. So the UK exporter makes the export entry. The EU importer pre-notifies traces, which is the EU's platform for sanitary and phytosanitary certification, and it's required for all importation of animals, animal products, food and feed, and so on. And then the goods are actually routed through the EU border control post. Okay.
Andrea, how much more have you got here? I'm just very
have got.
Look at that, it gives so much value. Do one more slide and then a summary, and then just walk through them and take it to the summry slide. I'm just very conscious of time.
Yeah, no, that's fine. Export.
Is that right?
I think, yeah, that's absolutely fine. I'm just thinking what would deliver more value, to be honest, in terms of probably future developments. Really, that very final slide would probably, because it gives us a little bit of an idea of what's to come. So
good.
If you sum up the positives, so we've got those 0 tariffs. Okay, so we've got 0 tariff, quota-free access for those products and services traded between the two parties, but we know that there's those formalities around rules of origin. We've got specific annexes in the CTA for alleviating non-tariff barriers for medical products, automotive, chemical products, and those organic products and wine that I mentioned earlier. We have road haulage, we've got clarity, so hauliers can continue to operate between the UK and the EU and to transit through the UK or the EU territory, which was questionable for some time. We've obviously got air transport of passengers and cargo that can continue without that quantitative restrictions on capacity or frequency, which again was something that was up in the air for a bit. We'll still have access to certain EU programs, so Horizon Europe, the Euratom research training program, and there's a whole host of others that we've negotiated continued access to. And then obviously signing the TCA enabled us to sign the trade agreement, the free trade agreement with Turkey as well, which was, you know, stood to impact a number of companies if we couldn't have that frictionless trade with Turkey. We do have a number of grace periods. So as I mentioned earlier, we've got a grace period on documentation relating to the flow of GB Northern Ireland goods. We've got 3 months on that. We've got UK exporters certifying origin on those manufactured goods. We've got potentially a 12-month grace period applying to that. We've got GDPR, so that was effectively from the 1st of January this year, we weren't going to be able to accept, process or store EU personal data without incorporating contractual clauses into our commercial agreements. We've now got a grace period of 4 to 6 months while GDPR, and that whole adequacy piece is resolved. In terms of further negotiation, obviously, we've got financial services still hasn't been resolved. So both sides have committed to setting out a framework for regulatory cooperation by the end of March this year, but it's still very much up in the air and a lot of uncertainty. Trade in services, so services provisions have been included, but really they don't go much beyond the kind of World Trade Organization level. And if they continue to stay as they are, there'll be notable barriers that will limit the scope of any services provided to trade in the EU. So we have to address that mutual recognition of professional qualifications and all sorts of stuff and really cement some of that stuff. Conformity assessments, as I said, there's no agreement on the mutual recognition of conformity assessments. That means that all UK manufacturers will need to have their products assessed for compliance with an EU notified body and vice versa. Then we've got the agri-food, sanitary and phytosanitary side of things, which we're hopeful will be addressed in time. Trade remedies, this is just really, trade remedies are kind of like a policy tool that allows governments to take remedial action against imports if they cause injury to domestic industry, for example. So there we're talking about the level playing field, so anti-dumping duties and counter-surveilling duties and stuff like that. There's nothing in the trade agreement that addresses that. And then of course data adequacy I've covered under GDPR, so that has to be addressed if we're to continue being able to transfer EU personal data into the EU, EU personal data into the UK. And that, I'm so sorry, I've gone over again. I'm going to be known as the woman who can never deliver on time. So sorry, Richard.
No, I think you'll be known as the lady who always wants to give incredible value to the participants, but also, I mean, the amount of expertise that you show in terms of the food and drink sector, in terms of rules of origin, the phytosanitary, and then labeling and rules of origin, I think is just phenomenal and very clear. I do just want to ask a couple of questions which came in.
Yeah.
I mean, one was right at the start and said, if a product was sold to prior to Brexit, is it okay to still purchase them? My understanding is once it's exported, that's okay. Could you just confirm that, Andrea? I mean,
yes. Well, if it hit the EU market before
correct.
the end of the transition period, then yes, it's fine.
Then it's fine. That's just like us holding stocks. Okay. One's asking, do you have any checklists for the rules of origin? The UK government website is like a novel. I'll agree with that. I'm creating spice blends using ingredients from multiple third countries, but the product is blended in the EU. Can I claim it as an EU origin product?
Potentially. I have a client who's doing something not with spices, but dealing in blends, and I think you potentially can, but it would be important to find the product specific rule of origin that applies to blends in the origin protocol, in the origin chapter, which, I mean, it's not, I'm just looking at it here, it's pretty extensive.
Okay.
But potentially transforming the goods from their raw components, so you're changing the commodity, if you like, then potentially it would meet that tariff classification rule change. And if it's done in the EU, obviously it's classed as bilateral accumulation, isn't it? Do you think differently, Richard?
No, I think that's fine. I think that might be worth just clarifying that and summarizing it in a paragraph that will respond to Pascal afterwards. Yeah. Yeah,
no, that's absolutely fine. If one of you can just send me an email so I remember it, that would be super, and I'll get back to you.
Yeah, if Sam can do that, that would be great. Somebody's asking, does anyone know of a logistics company would undertake being the importer of our products? I think that's quite a challenge. I deal with the logistics sector, and hauliers trying to stay away from those responsibilities, but you may find an importer who'd want to, but it will cost. We haven't had any contributions on that. If I find anybody, I'll report back to Con on that. Okay. Will there be a discussion on product labeling? We manufacture and export to the EU at times. Does our product have to have an EU business address or importer's address?
Yes.
I mean, you did cover a bit of that. Could you just reconfirm that?
Yeah, so when a product is placed on the EU or the Northern Ireland market, so remember the two are aligned under the Northern Ireland Protocol, then you need to be listing an EU or Northern Ireland food business operator. Is that right? FBO? Yes, food business operator's address. Yep. So where you've got goods that are placed on both the GB market and then on the Northern Ireland / European market, you might have two addresses on there, one for the GB FBO and one for the Northern Ireland / EU FBO.
Yeah, certainly that was Carlsberg's understanding on Friday.
Yeah.
And last one here, COI document requires point of entry into the EU if sent via Eurotunnel. It would enter the EU in France where it would be cleared. If, say, it was going to, sorry, I'm not following that one, Colin. We'll come back to you on that one. So I think I'll just summarize now, if I may. As I said, Andrea, I think you covered a huge amount there. And I'm always impressed about how well structured. And every time I listen to these type of presentations, I get a lot more from them. So I think there is definitely something about tiering and taking more and more information as you move through. I just wanted to signpost. Have we got the last page, Sam? Are you still there? And can we get the last page? Can
yeah, so I just was taking the details of that query. Don't want it to disappear.
If you can stop sharing, Andrea.
Oh yeah, sorry. Holding everybody up.
Fantastic. There's just two things I wanted to flag. One is that these are the contact details for the local LEPs and any questions that you may have. So if you're in any of those other LEP areas, please refer through to those. If you're in the SEMLEP area, I just wanted to flag a couple of things that are happening. We have something which is called our EU Exit Surgeries, and these are run by Andrew as well. And these are different from a webinar when we're just trying to share a lot of information. These are taking your individual business in-depth EU exit issue and we, over a 90-minute section, will analyze it, understand the implications in terms of the regulations, and come up with a couple of recommendations how you can take things forward. And Andrea will write up a report afterwards, so all of the details are captured in depth. So if there's anybody within the SEMLEP area that feels that they will benefit from that because of the complexity of the issue that they're trying to deal with, and that can be across food and drink, it could be other areas, or it can be labeling, it might be across a broader issue, and take into 2 or 3 different particular issues, tariff and non-tariff barriers, etc. Then if you believe you've got one of those, that would please do apply for an EU exit surgery. The next ones are on Friday, the 29th. We do have a couple of spaces free. I term them high value free consultancy, and I don't use those words in the same sentence very regularly, i.e. high value free and consultancy. So if you do have that, please do take it. And then just on the bottom right-hand corner as well, there's a number of different webinars that we're running over the next few weeks. And if they're applicable, please do sign up. So finally, I would like to thank Andrea again, very comprehensive. I think that it is recorded, so if anybody wants to go back and reference them, Sam will be getting those up on our website very soon. I've just seen how do I apply for the EU exit surgery. You can do that, the events page Sam's just answered. It is on our events page for the 29th. So if you have a look, if you're having problems, either Sam or myself could help you. Okay. I hope everybody's found that useful. Thank you very much for your attention. And I hope that has been beneficial to people. Thank you very much. Stay safe and take care.